Hi traders, in this video I want to address one very serious question, alright, that a lot of traders has been asking me, right? If you're familiar with one of the patterns, chart patterns in trading, it's called the head and shoulders pattern. And recently, there has been quite a bit of quite a number of head and shoulders pattern forming on this currency pair on the pound dollar, and there are many traders asking me, when we face with such situation, how do we deal with it? All right, so let me walk you through, some of the patterns that are not some of the patterns, but a few of the head and shoulders that we actually identified on the pound dollar itself. All right, the first one that I would like to share with you is over here. All right, we have an inverse one, the shoulder, the head, as well as the shoulder forming. All right, this is not a completed one, because what we are seeing is that the neckline hasn't been broken, right? But this is a potential head and shoulder, right? But if I break it down into a smaller time frame, right, this is happening on H4. If I go down to H1, all right, you can see that there's also another head and shoulder over here, all right, and this has been completed, all right? You have a left shoulder, the head, as well as the right shoulder over here. Alright, so we have this head and shoulder, and this has been completed. Alright, price has broken below it, but currently it's retracing upwards. Alright, and if we zoom in into this segment, alright, we are seeing another head and shoulder over here. We have this inverse one, alright, the left shoulder, the head, and then over here is another one. Alright, so with all this head and shoulders happening on the pound dollar, generally, alright, people will start asking, okay, so how do I manage, or which one should I trade? Alright, so I would like you to pause this video, alright, give yourself some time and think through how would you deal with such situation. Alright, so do you have an answer for the question as to how you deal with so many head and shoulders in the market? Alright, our simple solution to that is actually look for confluences. Alright, and if there's so many head and shoulders in the pattern, head and shoulders pattern in the market, right, forming, the one confluence that you should look out for is actually, instead of pound dollar, all right, look into Johnson and Johnson, all right, because this is a company that produces head and shoulder, and what you realize is that the confluence over here is the price actually rallied because of all this head and shoulders forming in pound dollar. All right, so simple solution, all right, invest in the company that produces head and shoulder. Okay, guys, kidding, all right. Obviously that's not the solution to how you deal with head and shoulders pattern forming all over in pound dollar, all right. But yes, the answer is still towards confluences, all right. But joke aside, not actually investing in Johnson and Johnson. But over here, all right, the confluence is, instead of focusing on technical analysis alone, you want to look into the fundamental and sentiment aspect of pound. All right, and if you know, right, with recent Brexit and with the BOE announcing that they might consider going into quantitative easing for the next meeting in August itself, right, the fundamental bias towards pound dollar is due towards the bear side. All right, and what we are seeing over here, price is currently falling. All right, I believe there's a news release at 4:30. All right, and if you look into the sentiment, all right, the interests of big traders and institutions are still towards the bear side. All right, so in that, with this confluences are both fundamental and sentiment, you might want to confluence with a technical analysis that gives you opportunity to sell into the pound dollar. All right, so that's what I mean by confluences. All right. The other thing I want to talk about in this video, all right, some of the traders actually ask is, how do we deal with trade management? All right, so I want to bring up this case study on gold itself. All right, the previous video I did on money management, which is the part one for risk management. So this video itself, I would like to talk about the second component, which is also important. Part of risk management is also inclusive of trade management. How do you manage your trade when it's running, all right, when it's active? So this one, right, this is a completed bullish pattern that's formed on gold, and you can see that price eventually hit our entry price and rallied. Alright, but it didn't really hit the initial target, the TP1 that we set, and it has started to retrace. Alright, so in this case, with trade management, alright, because it's so close to our first take profit, what we'll do is we actually shift our stop loss to break even, right? So in other words, we are protecting our initial capital, right? The worst case that can happen for this trade is actually a break even, meaning we don't actually suffer any losses, right? And part of trade management is, how can you then, based on this setup, identify another setup that you can enter. All right, and over here we have a potential divergence setup. All right, we see that price has print a lower low, all right, but your RSI indicator actually prints a higher high. All right, this gives us a divergence. All right, and we can see that this neckline has been broken by recent price movement. All right, so from part of our strategy is that once this has completed, all right, we'll be looking for the 61.8 Fibonacci retracement for our potential entry to get involved in a long setup. All right, so we are waiting for price to come back down towards the 61.8 Fibonacci level to look for long opportunities riding up further. All right, and part of trade management is that for the higher time frame trade, we have shift our stop loss to break even. All right, and so we can actually somehow transfer the risk to a new trade idea, right, which is this setup, the 61.8 retracement setup. And if this divergence setup gives us a profitable trade as well, we're actually risking one position, all right, one trade position, and be able to profit from two trades position. All right, so this is actually part of risk management and how you manage your trade itself. All right, and of course, hopefully by through this kind of trade management, you are able to profit more than just one trade idea. All right, you're actually leveraging on a same directional bias, but you are entering on two positions, risking just one position. All right, so this is the gist that I want to share with you, and hopefully through the sharing of confluences, you'll be able to gain certain insights as to how you can manage your trade. All right, as well as potential trade ideas when you face with different conflicting ideas. All right, build on confluences, not just on technical, but fundamental and sentiment aspect as well. All right, so with that, I would like to wish everyone a happy weekend, and do follow your trade plan and manage your risks properly. I'll see you soon.